All right, everybody, welcome back to another edition of Market Talks with Dr. Stoxx. Today is the 4th of November, 2024. We are one day away, 24 hours away from the election for the President of the United States, and man, anything can happen. We are absolutely in the dark about who will the next president be and what kind of Congress that person will be dealing with, and then how the market will respond to all of that. We are hoping and praying for a peaceful experience for everybody. And that's the best thing that can happen. Let's just keep it peaceful. So, coming to you from the live trading room, and if you're interested in joining us, go to drstoxx.com, DRSTOXX. I jump on the live mic almost every afternoon, and we talk about stocks, charts, trading strategies. I take chart requests and all kinds of fun things. And throughout the trading day, I share what it is that I'm trading, my entry, my stop price, my target, and all of that. All right, let me jump over to TradingView, and we're going to take a look at a few charts here. I did want to start. We've already actually, earlier than this recording, looked at the indexes, and we looked at the mags. I want to go over and take a look at the TICK index. And this is not one that I check out every day, but it is one that, especially when the market is getting either really strong or really weak, a good idea to go over here and take a look what's going on in the TICK. Now, the TICK is a measurement of up movements in price, down movements in price for the S&P 500 stocks. Whenever, let's say, 60% of the S&P 500 tick higher in any given moment, then the TICK index, TICK, will start to rise. And the same thing is true when it starts to fall. And you'll see that, this spread right here, this is the low tick of the day, this is the high tick of the day. Typically, when markets get really strong in one direction or the other, you're going to see that range expand. Most of the time, the TICK does not give us information that is tradable at all, but the exception to that rule comes when it gets up to an extreme high print or an extreme low print. You're going to find people will give different values as to what they call extreme. I have two values, 1200 and 1500. 1200 is kind of a preliminary extreme level. When you get up to 1500, that is when we should get really interested. Now, it's a contrarian indicator. So when it gets up to the 1500 positive, that's why this line is red, because that typically triggers some selling right after that. Selling can last for an hour. Selling can last for 3 days. Selling can last for a couple of weeks. We don't know. But when you get those extreme prints to the high side, what does that mean? It means that everybody has been jumping into stocks, bidding up, and now everybody who wanted to buy has already bought. And when that happens, the market can only go in one direction, that is down. And just the opposite is true on the downside. That's why this line is green. 1500 negative, everybody is selling, panic, get out, calling their broker, get me out of the stocks. And then it hits negative 1500 or worse, and you tend to get a rally because nobody's left to sell. Everybody's already on the sidelines. So keep an eye on TICK, but don't worry about it. These little jots and tittles up and down, the ranges up and down all throughout the day means absolutely nothing. But when it gets to the extreme, 1200 preliminary extreme, pay attention, 1500 major extreme, that you can trade on. The PCC, or the put-call ratio, is also something that I don't look at all that often, but I like to know when it's hitting extremes. Anything above 1.25 is an extremely bearish reading. That's where you tend to get rallies starting from. On the downside, anything below 0.8, maybe 0.75, to be fair, is an extreme bullish position, and that's where you start to get some pullback, some weakness, some consolidation going on in the market. Today we had a high of 1.4. That is an extremely bearish print. This is one of the reasons why, it's not the only reason why, but it's one of the reasons why I think the market's going to be okay heading into the election tomorrow and thereafter. Now, the rest of this week, we've got the FOMC on Wednesday. That presser, he's going to cut 25 basis points. That's a given. But what he says in the presser will determine the market direction for the next maybe couple of weeks. We get ISM on Thursday. The potential for a recessionary read right there is pretty good. So we have to see how that comes out. And then Friday, there's not a whole lot going on. A time for the market to kind of relax a little bit and reassess, and hopefully the election is done by then. And then I do think that's when the real market will emerge. So a bullish reading in, we didn't get anything really from the tick, but a bullish reading in put to call ratio. And then we look at the VIX. It is in a slight downward trend today. We could call this simply flagging here, consolidation of the recent gap up. Thursday last week was a horrible day. We're at Monday now of the new week. And the VIX, anytime the VIX is over 20, you've got a market that has a lot of vulnerability to the downside in it. Things can get a bit squirrely. Anything above 20 means that there's a lot of fear in the market, and fear tends to beget more fear. Huge extremes to the downside can happen when the VIX is up above 20. So we do have to be very, very careful. All of that also signals the fact that maybe the volatility and the fear in the market has gotten to an extreme. We saw the fear and greed index dip under 40 today, and that's a region where we consider to be the market in a fearful mode. And usually markets in a fearful mode tend to beget really nice rallies. And when markets are in a complacent mode, the VIX is down below 15, we tend to get some pullbacks, right? Unexpected pullbacks or consolidation or a little bit of weakness. So we're up here above 20. Between 15 and 20 is actually where I kind of like it. I like the VIX between 15 and 20. You get some good movement in the price, you get good trending action, you get some volatility that we can use to sell our premium positions, right? We take money every week out of the market by just selling some puts on really strong stocks that have good upside potential, and we do that in sort of in a way that limits our risk, but it's a very good income play for us. And that is best done between 15 and 20 on the VIX, right? That's a good time to sell premium. Now, last thing I wanted to show you are what I call the four canaries. These are indexes that flag the level of risk-taking in the market. When these are strong, there is a good appetite for risk. That's usually a bullish macro for the market. Market tends to do well when traders are willing to take on risk. Risk on, we call that. When these aren't doing very well, these four canaries, then the appetite for risk is very light. People are moving into safe havens. They're not wanting to buy the riskier things, the plays that can be really fun from a profitable perspective. And so that, we want to make sure where are they? The four canaries are right here. ARKK, which is Kathy Wood's fund, had its heyday, but lately it's been a receptacle for junk stocks that don't have earnings, stocks that are in downtrends, stocks that have been beaten down, they're out of favor of the market. She likes these stocks for whatever reason, she keeps buying them. And if that group, these risky assets that don't have earnings, is in rally mode, we know that there's a good, healthy appetite for risk. Junk bonds, high risk, right? High reward as well, right? The yield is always very good for junk bonds. When they're happy, that means there's good appetite for risk. The biotech sectors, XBI, did I show you ARK? It's up today, just a smidge, bouncing off the 50-period moving average in a modest uptrend. Not a bad looking chart. And the moving averages have just turned in a stacked way, 21 above the 50, 50 just above the 200. That's a pretty good sign. Junk bonds, uptrend. way oversold last Friday of last week. Well, actually Wednesday, Thursday, Friday last week. Just a horrible end of the week for bonds in general, junk bonds in particular. Bouncing back today, although it was kind of a gap and crap day, but at least it's green and has rejected the lows of Friday. That's a good thing. Biotech. So biotech sector, of course, many of these guys don't have funds. They don't even have a product that they're actually selling to the market. They're experimental. They're speculative. They've got all the stuff in their pipeline, but that's all they've got. If money is flowing into biotechs, you know that there's a good, healthy appetite for risk. Today they're up a smidge, and that's after a really nice close to the week on Friday. They had a great day on Friday, and we're long biotechs in the room as well. And lastly would be the bonds, and I just went over this chart. It's on the verge of breaking a falling wedge, which could potentially be very, very bullish for bonds. Yeah, so those four things, all four of our canaries are green today. That's a good sign for the macro environment that stocks are trading in. We just need to see this continue on, right? Some of these have been weak recently, so we need to see a good, healthy trend develop there in all four of those things. We could also add Bitcoin as another canary, but frankly, I'm just not smart enough to know the relationship between Bitcoin and stocks. And I know that it can be a risk asset, but whether that translates into stocks directly, I don't know. So it's not good today. Not good today, wasn't good on Friday last week, wasn't good on Thursday last week. So after potential of finally, it did look to me like it was finally, I'm sorry. I'm sorry, I have the wrong fund on there, because that fund, that BITO fund, pays out this massive dividend, and then that throws off the trending nature of the chart. This is the one you want to look at, ARKB. That's the breakout right there. So we had the breakout last week, and then it was a total bull trap right back down. Now, it is being caught at the 21 period moving average today. The stochastics are falling, getting close to the 20 line. That's where we would like to see them. And potentially setting up for a nice looking bounce, but we're not there yet. All right, so that's really all I've got for you all. I'm going to jump over to the main room, and we'll take a look at what charts you guys are interested in. We try to do this when time allows, take some chart requests. So let me see what you've got here. Let's start with PEG. Okay, well, what is this? It's down on earnings, obviously, and I'm going to repeat my earnings rule, which is that, and this applies to earnings where the stock gaps up. When the stock gaps up, that could potentially be a very, very, very bullish quarter going forward for that stock, because now the market is revaluating the share value and saying, you know, it's no longer a $100 stock, it's now a $120 stock. And as long as that gap stays open, and in most cases they do, you've got a really kind of low risk, high reward sort of setup following earnings. The opposite is true when stocks fall on earnings. The market doesn't like the trend that, I mean, this is a nice looking uptrend, right? Although you did have this little warning sign right there with a lower high and some distribution bars up there at the top. But otherwise, it is a nice looking uptrend, and the market is saying, nope, that is not the true company. It is not a $90 stock. It is a low $80 stock. And I don't think that's going to close anytime real soon. Typically, when the market gets it wrong on earnings, you see a reversal or a fade that same day. So sometimes stocks do gap down on earnings, but then they rally all the way back up to close the gap either that day or the next, because the market got it wrong. When the market gets it right, in this case, looks like it's getting it right, it gaps and just keeps on going, and man, you want to get out. You just want to get out. Don't even think about buying this one. That's just a no-go zone, maybe for weeks, maybe even for months. NVO. So we've been in and out of this stock, and we haven't been in it for quite a while. It had some bad news, and I'm totally forgetting now what it was. There was this gap down here, and then, way, way, way down here on earnings. It rallied back briefly after earnings, and then it just went right back down again. A weak little bounce, and right back down again. So Novo Nordisk, like Eli Lilly, is a play on their weight loss drugs, and so many bad side effects have been coming out about these, and I assume lawsuits are soon to follow if they haven't already. I don't think these, they shot way up on those drugs, and now that the drugs are having problems, they're coming back down again. Same with Eli Lilly, though I haven't looked at that chart for a while. So it's got earnings in a couple of days. Will that rescue the product, the company? I don't know. I have no idea. I haven't looked at their fundamentals in a long time. But it's just a complete no-go zone until you see a reversal of the momentum here, and just don't see anything reflecting that at all. So I would stay out. So MicroStrategy is a play on Bitcoin. So the CEO of the company, very big on Bitcoin, he's been selling shares of the company to finance, not selling shares, but offering shares to the market in order to finance more purchases of Bitcoin. Even though they have a software product, I don't know if anybody buys the software product. It's really just about, it's almost a shell company now for the value of Bitcoin. The Bitcoin hasn't been able to break out, as we saw, and it's also falling back. So frankly, at this point, with MicroStrategy doing this, I know it can be really exciting to catch a good move in MicroStrategy, because it is a monster stock when it gets moving. And we've had a few, right? We had a couple of call plays months ago in this one, and a couple of breakouts in our share plays. But frankly, at this point, because it's so close to the chart of Bitcoin, I would rather play Bitcoin. That said, this has a stronger chart. It is in an uptrend. Stacked MAs, very, very strong chart. Now, just on a pure price basis, I would wait until it tags the 21 period moving average. That could take a day or two. Let it reverse. Give it, look for a hammer candle, a doji, an inside day bar. I would take that. A piercing candle, a gap up that holds, anything like that, to signal that this pullback has come to an end. And the same is true for Bitcoin. I wouldn't buy MicroStrategy until you see Bitcoin back on track. But if you're long this one, if you bought down here, which is where you should have bought, then, and I didn't myself, if you bought down here and you've got lots of profits, I would do a trim and trail, right? Trim some of your profits off the table, bank some of those shares, and raise your stop up so that you can protect those profits. If you bought last week, well, you probably will get a reversal soon. Does look like it wants to do that, but it could be still 2 or 3 more days of pain before you get that. If you're not in it, don't buy it today. Wait for that reversal bar. Wait for it to give you a... I'm only going to take one stock per person, guys, so everybody gets covered. So this is a... is this the nuclear energy one? We were in this a while back. It's been in the IBD leaderboard. It's got very strong growth, and then it got whacked. Was it on earnings? Yeah, it did reverse on earnings, and it's been downhill ever since. You got to find out what's going on with that gap right there, because that was on news or downgrade or something, and that's usually not a buy. That's not a buy thing, not a buy signal. Not a buy opportunity. That's the word I'm looking for. So is this setting up for a dead cat bounce kind of thing? Yeah, probably. Probably not going to get above 80, and it's already at 78.60. So that's not really much of an upside reward, and the downside could come all the way down to the low 70s. I wouldn't buy this one. If I'm long, I think I would look for a better play. If it's in my family fund and I'm planning to hold on for several years, okay, that's a different story, but yeah, don't like it. it's broken all forms of support. It's got that gap there that's going to be problematic. And I have no idea why it gapped down the other day. You need to know that. If you're long this one or want to get into it, you need to know why that gapped down. And if you can, figure out whether that gap was justifiable or not. If it wasn't, then maybe you've got an extreme to the downside. It's undervalued. But you got to figure that out first. Nothing in this chart technically is telling me it's a buy. CEG, this is the... oops. Yeah, okay, so the earnings rule applies. Unless it gaps back up again and closes that gap on the day of earnings or by the next day, it's a no-go zone. This is dead money, probably going to be dead money for a few weeks. It could continue falling. It could churn around underneath that gap. It would be rare to see it reverse back into the gap after not doing it on that first day. Because the market is telling me, at least right now, that the market got it right. It's not worth $280. It's worth $228. So if you're already in this one, if you bought it on a dip, right, buy the dip, we're kind of conditioned for that, then you may have to be very, very patient if you want to see a profit on that. Could be weeks or months. Yeah, I know that not technically, but fundamentally, the demand for energy is huge because of the AI and data centers and all of that. And this is a company that's in a good position to benefit from that. This is just a bad chart. It's not showing me what I would want to see. So it's an avoid. Now, rule of thumb on earnings is that when it gaps down like that, it's a no-go zone for at least a couple of weeks probably, and you want to see it start to climb back up into the gap before you even think about buying it. If it gaps up on earnings and doesn't close for a couple of weeks, that's a really good place to get in and go for a swing trade. Okay, coin is going to be pretty much the same story as Bitcoin. Yeah, big slam down on earnings. Hold of the 50, so that's potentially good, but everything's downtrending. That's bad. Big flush out day on earnings. That's bad. That's bad. And on pullbacks, generally speaking, you want to see an uptrend and a soft pullback. You can buy it there. Uptrend, soft pullback, uptrend. When you And you could kind of say this is a brand new uptrend, right? But that's not a soft pullback. That's a collapse, and that's a problem. When markets drop sharply straight down like that, they tend to have a lot of downside pressure, a lot of overhead supply, and a lot of people that were buying on the way down that are now trapped underwater, and any little bounce the market gives them, they're out. So selling pressure just continues, and it can be a while before that gets back on track. And it won't go anywhere until Bitcoin gets back on track itself. SU is an oil play. This is not horrible. Slightly uptrending for the LRC. It is bouncing off the rising 200-period moving average. Yeah, the 21 and the 50 aren't good, and their prices below it. Energy, for me, has just been a no-go zone, and this is pretty much why. Look at this mess. This is just a messy chart. It's not trending. The 21 is up and down above the 50. The 50 is up and down above the 200. There's no structure here that is tradable. You can drill down into the hourly chart, the 15-minute chart, and do some day trading. That's fine. I have no problem with that, but it's not a swing trade, and you're pretty much going to see this all across the board for the major energy plays. I think I've only done maybe 2 or 3 energy plays in the last 6 months. I think I've been stopped out of all of them. I don't have a good read on the energy sector. So I just have been staying out. Both oil and energy just have been staying out, and I would recommend doing that for all of the people in the room, so that we just allow energy to get back on track. Maybe it needs the election. Okay, so you can see the difference here in this. This is a nice clean uptrend. It goes into periods of sideways consolidation. That's about as bullish as it can get. Breaks out, sideways consolidation, breakout, sideways consolidation, breakout. Let's call this more sideways consolidation. This looks very good. It's not really giving me a buy signal right here, but it's a great hold if you're already long. And if you're not already long, I would maybe let it settle into somewhere a little closer to that line, which is right around 288 and change. So let it come in a little bit, but that looks very good. That is a very strong chart. And I know this is on the IBD leaderboard as well. ATAT. I don't know this one. All right, so also nice looking chart. Uptrending, we've got the stacked MAs. Everything is rising. You had very good volume balance on that big pop higher. Yeah, some distribution going on around here, but not that bad. At the 21 midline of the LRC, holding what looks like 26. 26 is a good level of support. Yeah, this is good. Now you've got earnings coming up in a couple of weeks, so be aware of that. But this does look very good, and it looks to me like once this little area breaks, right? That's a bull flag, pennant, consolidation range, whatever you want to call it. But this high tight base is what William O'Neill calls these things. Very good, and good potential for a breakout to the upside. I like it. I like that chart. That's a good hold. I would even say that you could buy it. You could buy it down here just off of the lows and put your stop down about 20. Well, really tight stop. This is not a real big moving stock, I don't think. So maybe 25.25 for your stop, and your target would be up here in the blue zone, right? 32. Nice chart. Thank you. THC, we looked at this one last week. Big green stick. Kind of a messy chart, I have to say, right? Down, up, down, up, down, up. Slightly trending lower until today. Yeah, that's okay. It's not a great chart. It's not a perfect chart, but and then you've got this really messy thing over here going on just prior to earnings. I don't know what that was. And then big gap up on earnings. Hasn't even come close to closing that gap. This is a total revaluation, and it looks to me, even after a couple of little down days with the market, right back up, breaking out of the pullback trend today. This looks good. This is just good. I would say this is a good buy. It is kind of a big green stick, so I do have this rule. I don't like to buy on big green sticks unless I just have to get in, because usually on a big green stick like this one, you're going to get a better price the next day or the next couple of days, right? So just be aware of that. But if you have to get in, you would nibble here. You'd buy a little bit more if it does give you a pullback, or you could add if it takes out today's high. Let's do two more. Sorry, wrong one. Okay, maybe this is the one I'm thinking of. Did we? I feel like we looked at this one already. We did. Oh, you're just explaining issued new shares to the market. That's what caused that gap down. Okay. So keep in mind that share distribution like that is dilutive. It does lower PE ratios and things like that. But unless the market bounces back, they can be buy opportunities. But unless the market bounces right back quickly, the market is saying, not really worth it. We'll do one more. Well, let's do Dell because we did look at that. I'll do PGR too, just to be fair. So it's not a great chart. It is kind of mixed, right? Downtrending, but it looks to me like there's a potential here for a new uptrend developing. There's been a recent development in SMCI, which was the third largest customer of NVIDIA. And they're in all kinds of trouble right now because of accounting issues. And I did see a headline. I didn't dig down into the details, but I understand that Dell is going to be maybe stepping into that void. Now, whether it's NVIDIA buying from Dell or whether it's Dell buying from NVIDIA, I don't know. Someone in the room can probably clarify that. But all that's to say, if Dell and NVIDIA kind of hook up with each other, that's a big plus for Dell. It doesn't have much in the way to offer the market in its computer division, and that's, I've been trading Dell for years and years, and that's what I always thought of it as, a computer maker like Hewlett-Packard or the MacBook Plus and things like that. But beyond that, it's digging now into AI servers for data centers, and that should be where it focuses its future prospects. As far as the chart goes, the potential of a new uptrend here, higher lows. We're trying to break out the most recent pivot high, having a little bit of trouble with that, but the market's been also a little bit weak, especially for tech, and it is above that line today. So I would say actually this is a modest buy, something like a quarter position, maybe even a half position. And if you know more about the fundamentals, you might be more excited about Dell. I'm just not really up to speed on that yet. Technically speaking, I would say this is good. It's not great, but it is good. And I don't know whether you're going to come into some trouble. There's obviously a real big gap up there, and gaps do tend to act as a ceiling. And then you've got a little bit of a volume shelf there, but that's quite a ways above, right? I know that looked at the analysts. There are some really big 5-star analysts. There are 28 analysts covering this company. They're almost all in a buy or better. And 150 is the consensus price target. I could see it hitting 150 by the end of the year. And that's a pretty good trade from 131. Let's do PGR, and then we're done. Okay, so I like this also as it's uptrending. The 21 crossing the 50 is, it might be problematic. It's when moving averages cross over, that's not a buy signal or a sell signal. It's just showing us that there is some changing or shifting momentum in the price. And so we have to be aware that it's not showing us upward momentum right now. It's more showing us downward momentum. The longer term 100 period look back for LRC is up. The 50 period is up. The 200 period is up. So there's some good longer term price momentum higher. And I do like the fact that it is all the way down to the 20, flashing a buy signal on stochastics, and we're down here at the bottom of the LRC, 2.0 standard deviation away from the midline, and that's usually where you see a bounce, a rally start. But it hasn't started yet. We had a good buy signal on Thursday last week, kind of got negated the next day, and not doing real well today when a lot of things are doing well. So I would give it a little bit of a time. Let's see a good green stick of some kind on good volume, better than the day before. That could be tomorrow, and that's when you'd want to get in. All right, guys, I'm going to let you go. God bless. Have a great rest of the afternoon. We will see you back in the live trading room in just a little bit. Bye for now.